Let us now move on to our second real-world example, using the historical monthly chart of GBP/USD to see how these exact structure mapping principles play out across a major macroeconomic cycle. If we trace the market prior to 2008, the pair was in a macro uptrend. The market ran up, hit a peak, and then dropped to take out the nearest internal minor low. When the price takes that internal low, that is known as IDM or inducement. The exact millisecond that this internal low was broken and the inducement was taken, our macro higher high was officially confirmed. After some time, the price turned right back around, rallied up, and cleanly closed the candle body above that confirmed peak. This gave us a valid break of structure, or BOS. The moment that bullish BOS closed on the monthly chart, our macro higher low was instantly locked into the market. As you know from our core rules, this confirmed higher low represents our ultimate trend boundary, our change of character, or CHoCH level. Now look at what happens in 2008. The market faces a massive crash, plunges downward, and for the first time in years, a monthly candle body closes completely below this major higher low boundary. We officially had a bearish CHoCH on the monthly chart of GBP/USD. Because a monthly change of character had taken place, it signaled that this major Forex pair would remain under severe pressure for a very long time, since a monthly CHoCH has happened. When a macro time frame flips bearish, you do not look for random counter-trend buys. You wait for the market to follow its newly established bearish order flow. Once the price made a CHoCH, the market started crashing downward, and we see a correction. If you look at that first pullback right after the drop, it was completely invalid. If you look closely at the individual candlesticks making up that first bounce, none of them have actually taken the high or the liquidity of a prior candle. There is no candle liquidity capture at all. Every single candle remains completely inside the range of the previous bearish expansion, so that pullback is not a valid pullback. Because there is no IDM taken here, the macro lower low is still not confirmed. This is where retail traders get trapped. They try to catch the falling knife on an invalid pullback, thinking the market is turning around. Because the structure was unconfirmed and lacked any internal liquidity sweep, the price simply paused for a brief moment and, after some days, fell aggressively lower to extend the decline. Now, let us look further down at the bottom where you see the yellow circle. This yellow one is a valid candle liquidity sweep. Here, we can see a candle that cleanly sweeps the upside liquidity of a prior candle's high. After taking that single candle liquidity, the price action over the next few months successfully drives up and closes completely above that valid pullback level. This is our mechanical trigger. The market has taken its internal inducement, or IDM, which officially validates and locks in our macro lower low. Following this confirmation, the market turns back around, drops hard, and achieves a clean candle body close below that confirmed floor. This gives us a brand new break of structure, or BOS, but this time on the downside. With this bearish BOS locked in, we can immediately map our new bearish CHoCH level at the most recently confirmed macro lower high, until the price action can eventually rally up and close a monthly candle body completely above this new ceiling. The pair remains strictly bearish even after so many years. This perfectly matches an important foundational principle of Dow theory. A trend, once established, remains in place until we see definitive mechanical evidence of a reversal. By filtering out the noise and tracking your IDM and BOS footprints on the monthly chart, you can clearly see why GBP/USD stayed trapped in a multi-year bearish cycle after 2008. Master these structure mapping rules on the macro charts first, and you will never find yourself trading on the wrong side of institutional order flow.